why the U.S. economy is weak. Still way too much debt. And I know people that have followed me are probably like really sick of hearing me say this, like we know, Bob. But you know what? You have to know the reasons. You have to know the reasons. It's like playing sports. You know, all of a sudden, when you're playing baseball, you know what the key is? Keeping your eye on the ball. Watching the ball. Or when you play volleyball, you know, you got to watch the ball. And a good coach will tell you that. Watch the ball. Watch the ball. Over and over. And you know, when you do that, pretty soon, all of a sudden, you get a feel. You have perspective on why the markets are weak and what it's going to take to get them better again. This is consumer debt in the U.S. versus GDP. This is from Ned Davis Research. Anybody ever heard from Ned Davis Research? There's some pretty smart dudes. They're smart dudes. There's only about 10 or 15 people in the whole world I follow, by the way, and I think most of you that heard me speak know that. They've earned my respect. Because if any economist works for a trade organization, like, you know, National Association of Realtors, California Association of Realtors, National, you know, Home Builders of America, Mortgage Brokers of America, or Wall Street, in general, I won't listen to you. Because you're biased. You're nothing, you're selling your mouth for a price. But there are good people out there, folks. There are good ones. It's only taken me about 30 years to figure out who the good ones are. You know that, right? Yeah. Somebody's asking me about economics the other day, and they go, I'm an economist. They go, Bob, that's really hard. They go, yeah. They go, it took me 30 years to figure it out. For all of a sudden, well, you're comfortable standing in front of a group of people and talking about it. Because there's lots of stuff going on, everybody. And you can never be sure about anything. It's all probabilities. You guys know that, right? It's all probabilities. That's what poker is. It's probabilities. But look at this. Now, this is consumer debt. That's how much. This is only through the second quarter of this year, or maybe it's the first quarter. It's starting to come down. But look where it's come from, folks. Listen, when everybody started levering up, we're going to go back down here. That's where we're going to end up, like it or not. I don't care if they drop the friggin' interest rate to 0. You know, this stuff's got to be paid. It's close to 0 now. You know where I think mortgage rates are going? 30-year mortgage rates? I think they're going in the low 3s. One of the guys I really respect in this world is Bruce Norris. He is a very intelligent man. I remember being listening at one of his seminars, not a seminar, at one of his, he spoke for a club in San Diego about, 3 or 4 years ago. He packs the house as, normally does. And all of a sudden he goes, he's talking about interest rates. And he goes, how many people in this room think interest rates are going to go up? Everybody raised their hand. How many people think that real estate's going to go, interest rates are going down? One idiot raised his hand. Know who that idiot was? You're looking at him. And Bruce looked at me and he goes, you think there's going to be a recession, huh? I go, yeah. But I mean, it's some of these principles. I mean, sometimes to forecast this stuff, you have to be an economist. I study this stuff every day. Do you guys know that? Every day. I find it fascinating because I'm allocating capital of my own money. My own money's at risk out there. And the stock, I don't trust the stock market. Anybody that trusts the stock market, I mean, am I playing the stock market? Yeah, I'm long bonds and an ETF. I don't trust it. I think it's a totally rigged game. Well, what else am I going to do? I mean, you got to do something. But I think I can get out, based on past performance. I think I can get in and out and still do better than the rest. Because in a down market, all you got to do is do better than everybody else. If everybody else loses all their money and you only lose 50%, you know who's king of the mountain? Us. Us. That's what it is. And that's what it's going to be the next 10 years. Next 5 years at least. I mean, I don't think it's going to be like we're not all going to be homeless eating out of garbage cans. But it's going to be rough, folks. These are rough years. We're going back to the 1950s. Leave it to Beaver days. But now, I mean, that's what we're going back to, and you can see it. That's what this deleveraging is about right here. We're going to start living within our means again. We're going to be forced to live within our means. This isn't a choice we're making, just like the, gee, I think I'll do this. We're being forced, especially with the job market being what it is. U.S. consumers must delever their balance sheets by another $3 million. This chart, $3 trillion. I'm sorry, $3 trillion. So I forget, you know, billions, trillions. I find myself making that mistake all the time nowadays. You know what I mean? Pretty soon, you know, if this trend continues, money's going to be worthless, you guys. You know that? That's supply and demand. It's going to be worthless. That's bad news. That's when things, all of a sudden when people don't trust the currency, I'm going to share with you, I'm even seeing mainstream people starting to talk about hyperinflation nowadays, and I'm going to be sharing some charts with you on that. That is a possibility. You keep screwing around and people lose confidence, they just want out of the dollar. Done. I want out. I don't care what it is. I'll buy Beanie Babies. You got any Beanie Babies left? Anything. But so here we have this is U.S. consumers. This is income, and the red line is liabilities. You see what happened here about 2000? How these lines all of a sudden, you know, in debt just started soaring. Well, that was like everything. It was real estate. It was credit cards. It was cars. It was boats. Everything. People just started levering up. And now it's coming right back down here, folks. This spread right here is like 2 trillion, and it's going down here. So I mean, when I say 3, you know, it's going to end up down here somewhere. And it depends what happens with income. Look at income. Is income rising anymore? Nope. So, you know, we may be, you know, that may be a falling trend right there, too. Is everybody know that everybody's cutting back? Is everybody aware of that? I mean, that people are just cutting back in so many ways. I mean, I see it right here. I see it right here in the seminar I'm giving today. I see it. Because my subscriber base, I think I have like 600 subscribers. I think I got up to like 700 or something like that, in the low 600s. Normally this room is packed. Last year there was 150. For the first 5 years it was 200. I had to send people away. Last year it was 150. Now look, what do we have here? 40, which is fine. Doesn't matter to me. This is all going to be on DVD. It's the same great material. In fact, I'd rather be in a small group, wouldn't you? Wouldn't you rather have a smaller group than anybody in here, any of these packed rooms where I used to pack? We even have tables this time. And I didn't have to pay more for them. You know what I mean? It's a sign of the times, folks.